Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we're going to be talking about PayPal. We're going to be talking about maybe some other interesting companies like Visa, Klarna, these sort of things. Robinhood, Chime, potentially, SoFi, more SoFi, more Robinhood. And then, obviously, with every good video, we need some Nvidia and some other AI hype. Sounds like a pretty good episode to me. Let's try to wrap it at 30. That'll be a good day. And then just on the docket. So really quickly, what do we even call our show now? The Tech Bros Weekly. It's changed its name so many times. With Amit and Roy. That I think got pushed to the end of the week. Amit's traveling a ton, so obviously we're giving him that freedom there to work there. But we're going to push that time. Tomorrow, ladies and gentlemen, we've got another full docket. We have a SoFi fireside chat with CFO CFO Chris Lapointe. I was going to say Anthony Lapointe. That guy would be a rock star. With the CFO Chris Lapointe, that'll be interesting. Tomorrow, I'll talk about what I think that they'll talk about, or maybe we can even brainstorm that today. But we'll also have our discussion with Brad Freeman and Evan from Stock Market News. That will be tomorrow as well. That'll be the second episode of our weekly show. I don't think we have a name yet. We need to discuss that, but we really are just the stock nerds, not including the stock market nerd. Kelly, good to see you. Sergey, great to see you. Paul, great to see you, brother. Jacob, Luis, Ryan, George, Clipgrid, Beer and Chicken, Gustav, Ryan again. Hello, everyone. Hello. Becky, good to see you. ETF, great to see you. Okay. Now, let's jump first into, why don't we go into PayPal originally, okay? So let me see if I can, oh yeah, everything's working. Okay. First, let's talk about PayPal, because yesterday we talked about a bunch of new products that they're rolling out, things that really do make a large difference in their actual earnings. Then today, Alex Chris said, hey, by the way, we're going to be launching another new physical card for in-store purchases. Omnichannel is working, and omnichannel users transact about 6 times more with about 2 times the average revenue per account. Okay. So now this new PayPal credit card, which personally I hate the look of. I like the color, but like PayPal I wouldn't really think of as a credit card. So the fact that they put their name like that large on the card, whatever. I get what they're doing. It's good branding, maybe. I wouldn't use it though. It's definitely ugly. Overall though, if this does lead to 6x more transactions and 2 times more average revenue per account, love it. Continue to roll out these types of changes. Those are the things that are going to make actual financial changes. Okay. You've got a massive user base of 300 plus, or even essentially 400 plus million, but I'm talking, I was thinking more of the 235 million monthly active users. Those types of people are the people that you will want to actually give out those cards to. Okay. Yeah, the card is hideous. Yeah, 100%. It looks like trash, but they're new. You know, it looks like a card that like Cash App would make or so. I don't know. Like it looks like a kid's card. Either way, it's still beneficial to the company overall. But I don't know who actually does the planning for that. If that's PayPal's design or Synchrony Bank or whoever is a part of that on their side. It's completely whatever. All right. Let's move quickly on to a little bit of Robinhood news that we didn't really cover before, and that's Robinhood Strategies. Okay. Robinhood Strategies is a part of their business that is more akin to a robo-advisor, right? You actually put in, you can change some of the individual allotments of certain companies that you want to invest in, but it gives you an automatic portfolio that you can put money into, and they will charge you a annualized rate of 0.25%. which is in line with the SoFis and all the other, wealth fronts and all the other companies that do robo-advisors. However, Robinhood Strategies is a little bit different because Robinhood always needs to step it up by just one step. And that's if you were already paying, what is it, $500? I forget what it is. Then the cap is completely like you're capped out on your fees and you no longer have to pay any more. I think it's the magic number is once you start getting to that 100,000 mark, that's what it is. It's 100,000 leads to about $250 in annual fees. Then it goes away. They're already hitting $250 million. 75,000 people are using Robinhood strategies. This was just rolled out like in March. Okay. It's crazy. Overall, the impact of this $250 million is at most, assuming no one has passed the cap, about $630,000 a year. It's nothing. I mean, who here wouldn't like to make $630,000 extra dollars? I mean, Robinhood would too, but I mean, the salaries of the companies or of the people that made this product are not even, it's not even remotely enough to cover their own headcount fees. That being said, right? This is a great way to have more of people's overall, like, whether it's retirement accounts or overall just percentage of their wealth on Robinhood without needing multiple options. It's a great product. I'm happy with its growth. And I'm really excited to see like none of that excitement that we were feeling back whenever Robinhood showed off their banking products has gone away, right? Because they really haven't brought it up, that people have kind of thought that like, oh, it's kind of just gone by the wayside, but it was expected for near the end of the year. So September, October-ish was the original pitch, right? Whenever that does come out, I cannot wait to see these little snippet updates like what Vlad is giving here to say, these are the amount of deposits. This is the amount of people that are getting our cards or what have you in terms of the features that they'll end up using to say, we're doubling month over month in these products. This is bringing in more Robinhood Gold members. The whole cross-selling all over again. So the next part that I want to talk about is still Robinhood really quickly, but I want to talk about the stock. Let me just bring up Mumu really quickly, and then we can take a look at the thing. By the way, Chime is about to be public soon. Really excited about that. It's actually making companies like SoFi look even better. But really quickly, Robinhood over the last 1 year is up 240%. 240%. Okay. I made a video today. It was 230% whenever I recorded it. And then it's already gone up during the day all the way up to 5.5% increase on the day. Okay. So like super great. On top of that, there's real belief that Robinhood is going to get into the S&P 500 this Friday, or at least announce that they got in this Friday. Maybe AppLovin is on there for the list of companies that could win over that spot. Maybe a company that no one is expecting to get in, like Williams-Sonoma, is next up on the chopping block. But honestly, Robinhood is an extremely fast-growing company with amazing margins. They're almost breaching 70 billion. Yeah, $64 billion of market cap. They go way beyond the threshold for getting onto the S&P 500. So I'm extremely happy with Robinhood's success. The thing that I want everyone to know, and it feels silly as this happens, but guys, seriously, especially for a lot of you guys, like the SoFi bulls out there, you guys obviously see what makes a good fintech, right? You notice the consumer trends. You can see people's average revenue per user growing, the deposits per user. You can see all those trends. Obviously, if you're investing in those types of companies, you know what to look for to some degree. Robinhood, whenever it was $8, I didn't understand the business, which sounds counterintuitive. It seemed like more of a screaming buy than what it was or what it is today. But really, they hit a real inflection point. I think it was Q1 of 2024 was whenever I became a buyer. Before that, they were really not doing as well. Growth was stagnant, margins were stagnant, and then everything changed. Their marketing efforts changed. It was really around Robinhood Gold and Robinhood retirement accounts, which really made their average revenue per user explode. Okay. But the reason why I bring this up is because I had a lot of people yelling at me at the $8 mark saying, hey, you got to buy this company. I said, no, no, no. I can see a failing company, or I notice a failing company whenever I see it. After Q1 of 2024, the stock ran up and I was able to get in at around $17 a share, which sounds like an amazing deal in hindsight. But really, people called me crazy. They said, how could you buy into this company for the first time at nearly $20 when that was as high as the company was going to go in recent history, right? Everyone goes, oh, if you want to get back in, look for prices that are, $12. Look for prices around 10 because that's where it had been hovering for a long time. Massive spike up. I bought it. And as it continued to climb, $25 seemed like a crazy purchase, $27, $30, all the way up to $45 a share. People said, this is the highest it's going to go. Okay. Now at 70, people are saying, absolutely not. You cannot touch this company at $70 a share. Okay. I'm telling you guys, I'm not here to make any guarantees, but I'll tell you about something that I am observing from Robinhood. One, you're seeing a change in their strategy as the company has matured. Okay. The types of products that they put out has changed. The speed at which they put out products has accelerated. Okay. In that same breath, the customers that are already there are dealing with Robinhood more, and new customers who have not previously trusted Robinhood are coming to say, you know what? I've had some problems with Robinhood in the past with, problems like buy buttons being taken away and everything. But the offer that they're offering, from their credit card to their APYs in their cash accounts to, commission-free or commission-free options, even not just equities, but even options, is too much for me to pass up on, and I'd rather not pay those prices at another brokerage. Okay? And you're seeing this continuous growth. They're sitting on a very fat cash stack, which now they're starting to lower to do two things mainly. Buy back shares, which is helping them stay dilution-free, which is the hallmark of any great or well-executed business. And then the next one is acquisitions. Now, the acquisition strategy can be very, very rough, okay? Because they can end up going and buying companies that potentially, their investors or their shareholders do not see any value in. What I've noticed from Robinhood is they have such a strong culture, and people see that the stock is rising so fast that the companies that they're actually end up buying, they're buying such great deals on. Like Bitstamp was a $200 million acquisition, and last year they did $95 million in revenue. I mean, like, you don't really see those very often, right? So I think that a lot of these companies that end up wanting to be acquired by Robinhood see that their companies are in good hands. Potentially, they even want shares in Robinhood or employment at Robinhood to say, you know what? I may be a founder of this smaller company, but I'd love to be on the C-suite of that business to help fund this new area of growth. And if I can work alongside Vlad Tenev, this might actually be beneficial for both of us. So that mutual respect from the companies that they're acquiring, if you go and look at any of the Robinhood, like meetings or events that they end up putting on, you'll notice that the trade PMR guys are all there. Like all the big teams that they've ended up acquiring are very, very close to Robinhood's own management, not just because they gave them millions of dollars, but because they also are going to benefit from the future success of Robinhood. So they want to continue to bet on that business. So let's continue here, though. Is $70 the high? What constitutes us stopping at 70 or continuing this run past all the way into $100 billion business or $100 per share, which I said that it will get to $100 per share in my last video that I just posted today. There's so much more detail in that video than what I'm giving to you guys here. But essentially, I said that's going to happen over the next 12 months. On a conservative basis, I think that that's going to happen. Things can go wrong where it ends up not happening. Crypto can end up tanking, markets can end up tanking in general. Something like this would absolutely stop Robinhood from continuing its journey. But as it stands, the level of compounding, the level of individual user engagement, like average revenue per user, deposits per user, is all going in one direction. These compounding effects on top of compounding effects makes a very fast, large snowball. Okay. So people always look at the company's stock and they say, okay, 240% year over year, this cannot be sustained. But like the revenue is up triple digits, their margins have expanded. Their rule of 40 in the last quarter was 111%. How long do you hold that up for? If you can sustain anywhere above 80% on a rule of 40, meaning a combination of both your operating margins or adjusted EBITDA margins, it's really dependent on the business, or year over year growth rates on net revenue. Okay. The combination of those two things to try to get 80 plus leads to spectacular businesses. Please follow those. And the way that I would look at them is I'd rather pay a hefty fee for those businesses than not be a part of them at all. Okay. Shopify, there was no good time to buy Shopify. I mean, none. Between the times of 2016 or really 2017, whenever people really started to learn about the business, all the way till today, there's very few times whenever you could consider Shopify to be a cheap business. It's always been expensive because they've always had high margins and fast growth rates, much faster than the market, which means that they're taking. There was a statistic that came in a while ago that said for every merchant that leaves Shopify, they gain 49 more. Okay. Robinhood recently came out with a saying that they said, we're ACATS positive, which means we see balances in, transfers in from other institutions positive versus any of the other transactions out. Okay. Which means Schwab to Robinhood or Webull to Robinhood or Moomoo to Robinhood or any single business, they see more customers coming from those platforms than leaving to go over there. That includes SoFi, that includes, all of them, eToro and all of them. That type of statistic is one of the ones where you go, oh, this company cannot be valued like its peers. This will be valued 5x its peers, 10x its peers, because every single one of its peers is suffering from their success. They fear, like whenever all the brokerage companies, they go to bed, Schwab CEO is closing his eyes, he's going to bed or she's going to bed. I actually don't even know who it is. But they fear Robinhood, I guarantee it. Right now, they're a small company. It's not that big of a deal. But at this level of compounding, those become very big deals very quickly. I'm very, very happy about Robinhood's success right now. I hope that they get into the S&P 500. That'll give them a big level of security on the downsides. Not only the pop that I think that we'll get if inclusion happens. If they don't end up getting it, I mean, you might actually see a drawback because I think everyone is really thinking that we're going to get in this Friday. But it gives us a little bit of stability on the downsides. I don't think we get back to the 25s or even 30s if that ends up happening, that we get into the S&P 500. So, yeah. All right. I think I've, talked about that enough. If you guys want to see my video, check out my most recent video. I talk about my price target of $100 on Robinhood over the next 12 months. And you can see some of the other things that we end up talking about, like the Bitstamp acquisition, the WonderFi acquisition, these sort of things, what it actually means for Robinhood. It's a pretty interesting video. Now, also, by the way, I think something else to really consider is that SoFi, and don't look at this from a share price perspective, because everyone goes, oh, well, how can SoFi be 13 whenever Robinhood is 70? Look at it from a market cap perspective, okay? Please, going forward. But still, like SoFi is what? $15 billion? Or Robinhood is about $64 billion. So it's about 1/4 the business. Currently, Robinhood is growing much, much faster. And if the growths were both very linear, which SoFi's is, okay, we don't see any drops in our revenue. It's been very consistent. Growth has been consistent and margin expansion has been consistent, okay? The premium that investors over the long term will put on consistency of growth and strong brands is insane. Look to Costco as probably the most large example of that, of a company that actually doesn't grow that much. I think it's like 9% year over year, consistent margins, expectable earnings, in any environment, by the way, this could be in a full-blown recession or in the greatest bull markets of all time, most investors will be able to assume what Costco's growth would end up seeing. That actually allows them to be priced so much higher than the rest of the market. And SoFi should get some premium along those lines because their earnings are extremely reliable and easy to gauge. The only like I've guessed SoFi's earnings every single quarter, and the only time that I'm ever surprised is mostly to the down or like to the upside. So I've always been lower than what they are actually putting out. So yeah, that's a very good place to be. Robinhood right now being 4x SoFi would make sense if it was consistent growth. Okay, if it had a Palantir-esque thing where no matter what, like Palantir, to give Palantir a lot of favors, if we're in the biggest of bull markets or the biggest of recessions, the products that they're offering would still be very much in demand. And I actually don't think that any of that would be affected by the companies that they're offering their products to, because there is no second place. They can't go to a cheaper budget offering once you've had the Palantir experience. Same way that, you couldn't go back to Walmart or Target if you've had the Costco experience. You're willing to pay that annual fee because if you like it that much, you're probably going to get your cash back anyway and pay off your membership. But anyway, what I wanted to add to that is that with Robinhood, if we do go into a recession, the whole bull case goes away. Okay, this is the big problem, and that the 4x multiple that Robinhood has, I don't think is as it's too big of a margin for the lack of margin of safety that we're giving to SoFi. So am I calling for Robinhood to come down in stock price? No, because there's a massive amounts of potential bull case, and they're going to be growing even in recessions. They're still going to be taking market share from the other competitors. It's just the general financial aspect of the business. All brokerages will end up making less money during those times, right? The thing is that SoFi should be given a premium. Okay, I actually think the market could stomach SoFi being double the price right now with no changes to fundamentals, no changes to the actual story. The real thing that I think the market's lacking is just fully understanding the story at all. Anytime that I see a $14 price or anything like this from Wall Street, they continue to talk about the same terrible flaws that they end up showing off for SoFi that is becoming less and less of even an issue, let alone if it even was an issue. They always talk about raising defaults or the assumptions on their revenue are way too grandiose, right? But none of those things have actually come true at all. We're actually way lower on defaults. We are assuming a very small amount and assuming high defaults again. So like, I don't know. It's just silly the way that current Wall Street analysts look at SoFi. The loan platform business is given absolutely zero love, even though it went from a $0 to $100 million business in 3 quarters. Like, that's crazy to me. We're essentially replicating an Upstart in like next quarter. Like next quarter will rival Upstart, and that was in 4 quarters. It's pretty interesting. Okay. Another question right here. Coreweave is insane. Just how? So I actually felt crazy. I thought I was missing something, and I still think I am with Coreweave. But I really did see whenever Coreweave was around $50 a share and we were doing the earnings call and everything. I remember there was some people in the chat. Hopefully the live chat is still available, because you could see some of these guys going, "Oh, this thing's going down to $20 a share." I hope I'm glad those people sold. I just love the ultra pessimistic people that say things just to say things. Anyway, but I thought I was missing something, because a company that is growing 420%, that is closing massive deals, and people looked at the OpenAI deal and went, "Okay, yeah, that's a very big deal," meaning the actual deal size was very big, 11.9 billion, but also it's like potentially not enough to value them at these high prices. What I think people were missing is that that's not going to be the only deal. That was the first deal. you know. And then like a day after earnings, then we closed another 4 billion. And then, you know, we continue to close all of these massive, large potential future sales for them, right? So if their future deliverables are raised really high, then, you know, Wall Street can project larger and larger guidances for them going forward. So I really did suspect some sort of Palantir-esque extreme valuation on CoreWeave, but there are still parts of the equation that I don't understand, and I can just play that entire story much easier by just investing in Nvidia. And that's the thing that I think is most important for people, right? If we take a look at Nvidia really quickly, what you'll see is that, well, one, let's talk about hype for Nvidia. Sam Altman said, hot AI summer, like a little reference to hot girl summer, and says lots of great releases coming. Not only that, he also updated today that Codex, which is one of their newer, really advanced agentic style coding bots that works on top of code that it's already written before really, really well, is now able to also browse the web. So it continues to increase their use cases, continues the token generation that is required, more things like this. And to me, what it goes back to is, okay, well, who are the companies that are really benefiting from all these changes? As OpenAI scales and needs more requirements, what are they doing with all this money that's leading them to have larger and larger deficits? Well, they're spending it on one company, and that company is potentially today now the largest company in the world, Nvidia. Congratulations to the Nvidia shareholders, now being back on top, 3.444 billion, or sorry, trillion. Not used to saying that number a lot. $3.444 trillion in market cap. Is it enough? I'm going to say no. Let me actually bring up YouTube really quick. Let's do a poll, okay? Because I heard on my most recent video on the Robinhood poll, or sorry, on the Robinhood video, someone said, "What is going to happen first? Is SoFi going to get to $25 first, Nvidia to 200, or Robinhood to 100?" Funnily enough, I think it's a pretty close tie between Nvidia or Robinhood. I think because Robinhood gets into the S&P this Friday, I think it's most likely them. Whoa, Kelly with the #1 crown. Congratulations. Here, 1 second. I need to blow my nose. 1 second. All right, I'm back. Okay. But let's do this poll. Start a poll. Which one or which stock reaches their price target first? SoFi to 25. Robinhood to 100. And then I'll give you guys my opinions. Nvidia to 200. Let me know. Amit says, watching Tanner from my plane. Amit, honestly, I knew Palantir was doing well for you. I didn't know you bought a plane, brother. That's freaking awesome. Congratulations. Actually, Amit, which was pretty funny, he sent me a picture from his plane. I don't know why. He has, you know, people sitting beside him on his plane, but the person that was sitting beside him was watching my video. This is literally what he sent me. Actually, wait, I'll have to hold on. I'll do it this way. He sent me this, and this person right here is watching my video. You see the QR code right there, the things that's what this is, that's what that is. And that's the chart I made for Robinhood. I thought, wow, that's freaking crazy. Overall, though, yeah. 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 No shot. That's what I said. I was like, bro, what are you talking about right now? But no, he said it was true. Small world, honestly. And I think it's kind of crazy, right? Like whenever I look at the views right now, there's about 550 people watching right now. If I were to look at a crowd of 550 people, that's a ton of people, dude. We did it a meetup one time. I think there was 160 people that came through and left the whole time, but the entire building was packed, like packed, you know? So I don't know. It is weird sometimes to think about that. Like it's not just a number. These are absolutely like a lot of real people. You know, it's like an insane community that we have that are just all trying to invest in companies to, you know, further our overall wealth in life, I guess. And it's a freaking honor to be part of your guys' day. And thank you so much. Like, it's crazy. So this is kind of interesting. I want to talk about this. This is a different story. I don't cover these two companies, but I think about it whenever I think about, you know, where PayPal is going to go into the future, where SoFi's Galileo is going to go into the future. I'm not going to spend a whole lot of time on this, but this is still an interesting story. Klarna and Visa are launching a pilot for a new debit card with increased flexibility, which is essentially buy now, pay later. So it's combining buy now or debit and pay over time flexibilities in one card. Now, there's been a couple companies that have been working with these new Visa Flex cards, and MasterCard is starting to roll out a similar thing. I think it's called MasterCard One, if I remember correctly. But Galileo needs to get on these things. Not only that, but like, let's offer those to our actual customers. Speaking of which, no one ever gives credit to the different options that you have as a Robinhood user. Their cards are so amazing. Like, not only does Robinhood Gold Card offer you 3%, and that's what everyone talks about, is the 3%, the 3%, the 3%. Okay. The flexibility to where to actually put that cash back is awesome. But this part might literally be my favorite. Trial cards or temp cards are unbelievable. Not only can they be used and, like, you know, give to your kid or whatever and say, hey, I'm giving you this number. You can go buy your Fortnite points or whatever you're going to do, you know, your V-Bucks. But then after that, the card's getting cut off. You're not buying V-Bucks on my card whenever I'm not home. Okay. In another way, though, it's a great way to sign up for promotions or things like this, where they ask for your card, but then they have no way of charging that card later on. The card number simply goes away, and you've only given them a temporary number. Now, you can sign up for businesses and do this essentially with any card, but they'll charge you a monthly fee, like $4 a month for doing this, right? Why do that whenever that $4, or let's round it up to $5, and I'll tell you why. Because Robinhood Gold is essentially $5. So why don't you pay for access to that, plus better APY on your checkings, plus you know, better pricing on index options and futures, and you know, all the functionality that you get with that, better retirement accounts, everything like this, all for $5 a month, and actually cheaper if you buy the annual plan. But yeah. So beer and chicken, very, very different thing. SoFi does virtual buy now, pay later cards because it's their only way of issuing buy or pay in four. Okay. So they make you offer that, and then you'll get like a $500, $1,000 or $2,000 thing, but that's the only way of offering it. It's different than what is being offered through Visa Flexibles or Visa's Flex card, and also different from what you know, Robinhood is also offering as well. Tanner, the poll results are done. Well, I mean, not really. 233 votes, Guys, we got 574 of you in the chat. If you are on YouTube, respond to the thing. I want to know what happens first. And also, are you guys shareholders of all of these companies, SoFi, Robinhood, Nvidia? Or are you sort of betting largely on one of those winning and not really betting on the other ones? And yes, by the way, SoFi has a fireside chat tomorrow. I'll be live. That I'm very excited for. I don't care how management wants to talk to retail investors. That part I do not care about. I just want them to continue talking. Whenever they talk, they don't really say a whole lot of bad things. They usually say a lot of good things that get me more excited about the business, give us more transparency. And so the more times that I can kind of get them to give that level of transparency, the better as investors that we are going to be, right? Like, okay, thank you guys for more people putting in the polls. 54% of you say Robinhood to 100 is the most likely. Okay. SoFi to 25 is at a 28%, 29%, and Nvidia at the lowest, Nvidia to 200. Now, I understand why you guys say that. It's definitely got to go the largest amount in terms of market cap. Trillions of new dollars need to be added for it to go to $200 per share. However, you see it in the Meta deal that just end up being talked about today, where they're talking about leasing out, potential nuclear deals and everything like this, so that they can get better access to clean energy, right? 20-year deal signed. 20-year. The reason why they're doing this is that the data center usage that they are expecting is going to be absolutely enormous. Okay. AI is not some flash in the pan, stablecoin-esque development, like, oh, once it's built, it's done. No, this is seemingly like an endless development, one that continues to just get stronger and stronger and allow for more use cases or just more use in general, right? The number one benefactor of all of these different things is Nvidia. And the trillions of dollars that I think that people is saying is far away is not really far, in my opinion. Like, in free cash flow, they just printed $26 billion of free cash flow last quarter. Most likely, they end the year in 2025 doing essentially $100 billion in free cash flow. What other company does this? What other company on a net income basis is bringing in as much money as they are? None would be the answer. Right now, Microsoft. Okay? That won't be the case at the end of the year. Not because Microsoft has slowed down, but because Nvidia continues to accelerate. It's an exciting place to be. TSM today came out and said, we still have no way of fulfilling all of the demand that we're seeing from semiconductors. Gets me excited as a shareholder, that's for sure. Tanner, what would you say to SoFi's management team that they should do to double the stock price from here? Well, I think that they should continue doing what they're already doing. So, but in terms of actionable things that I do actually think would make a difference would just be much more communication, much more outbound marketing in terms of what, management can do in terms of pumping the stock. Now, pumping the stock sounds like it's a bad thing, but honestly, it is very much in the goal of the CEO to increase the stock price, add value back to the shareholders, right? It's fiduciary duty. So I'm biased every time I say this because, like, hey, should he do it on my podcast? I mean, I would love that, but I don't necessarily need him to do it on my podcast. I think that it would be much more beneficial for him to go on the Compound and Friends, do something like that, where I remember a long time ago, the Compound and Friends, like Josh Brown and all those guys were, sorry, I don't know why I gave disrespect to Michael Batnick. I know his name. That was silly. But they were talking about SoFi a while ago, and they didn't quite understand what it meant between members versus products and all of these things. They didn't really understand it. And I just think they should do as much outbound in terms of talking as possible. And now, Amit is 100% right on that. Do I think that that determines that a company should deserve a tech multiple? No. But would it help? Probably. I mean, yeah. So I want them to do both. And as Jacob said, which I put in the title, yes, I do think that SoFi S&P 400 is very, very doable. They pass all the criteria. We're clearly not getting into the S&P 500 anytime soon. The actual bar for getting in is too far. Like we're not even there. And plus, there are financial companies that are ahead of us for S&P 500 inclusion that are not even in, like Robinhood. You know, they're going to throw in a $70 billion company before they throw in a $20 billion company, if that makes sense. But S&P 400 inclusion is still great. It's not as followed as the S&P 500. That is the golden standard. But still, I mean, this week, that's also June 6th. That could be this Friday as well. If two of my favorite fintech companies get in on the exact same day, guys, we are going to do a party stream, okay? Shots are on me if that ends up happening. That'll be super exciting. Loading up on, I mean, for a name like PLTR to be loading up on SoFi today, appreciate you. S&P 400 is, you're right. That is the mid cap, their index. So the S&P 500 is the large one. That's sort of the main 500 US companies that makes up the economy there that they think will do well over time. But there's also an S&P 400, which is their mid cap index. And there's also an S&P 600 index, which is their small cap index. Most people follow just the one. PLTR, brother. Thank you so much, man. Appreciate that. Not needed at all, but I could see you're loaded with your PLTR gains. Congratulations. And now he's buying not only SoFi for himself, but also SoFi for me. I might even do that. With your money, I'm going to buy some SoFi shares. How about that? I think actually this is what we'll do. I think I have my brokerage just uploaded 24-hour markets. I wonder if I can buy $100 of SoFi right now. Let's see. Bear with me. Should I do it, guys? Will we all wait for me to get $100 more? Okay, can I do this now? Okay, well, I got to go a little over. It's only 8 shares. Overnight hours. Okay, is this showing anything? How about 200? Okay, you want me to buy? Okay, I'll buy 200. Hold on. Okay, wait 1 sec. Okay, that's 15 shares. Okay, so right now it's only a limit buy, so it hasn't gone through yet. I don't know how much activity there is on these overnight markets, but I think that is okay to show. Let me just make sure. Come on. I'll show you guys confirmation whenever it goes through. There you go. Thank you, PLTR. Appreciate that. would already be filled on Robinhood. Yeah, I need to make sure. I've never done. They just rolled it out for things, so I got to make sure that I 100% did it right. Either way, it's going to close in the morning, but I just want to make sure that it even went through 100% or not. Yeah, no, it closed. It closed. Yeah, it went through. I got no real way of showing it without showing like account numbers and stuff. Can I show that? No. Anyway, it did complete. I'll do a cropped one and then I'll scratch out my numbers, but it'll be hard for me to show on camera. Anyway, awesome. Thank you, PLTR. Really appreciate that, brother. You just got me more shares of SoFi, and I haven't bought in a while, so that was fun. Okay. I'm sweating like ever right now. It's such a hot room in here. I got too many lights on at night. My computer's been running all day. Yeah, I did buy US dollars, by the way. I did. 15 shares is how many I bought. It's not in Canadian currency. 15 shares is 15 shares. Okay. Okay, I don't know if we have anything else to cover, but ladies and gentlemen, thank you all so much for watching. I really do appreciate your time. If you guys want to see more coverage, I'm going to continue to upload more videos. One of my newer videos, I want to do a SoFi versus Chime video, which is going to make SoFi look really good, by the way. But aside from, are we talking about Joby? I'm not personally talking about Joby, but maybe Joby is not going to be as bad as what people think. I mean, they're actually doing pretty well. But anyway, thank you guys. Really do appreciate your time. Consider subscribing if you want to see more live content, which is more usually at night. But bye for now. See you later.